Welcome everyone to the sixth StakeHound Ask Me Anything session. This is Albert Castellana, CEO of StakeHound, and I'll be here every week with a conversation with an industry leader to discuss the state of the industry, staking, and DeFi. The StakeHound brings staking and DeFi together so that you no longer have to choose between earning from staking while securing your beloved networks or earning from participating in the booming DeFi applications. Thanks to StakeHound, you'll be able to trade a one-to-one representation of any staked proof-of-stake token on Uniswap or borrow against them on tools like Aave or Compound. Just a couple of weeks ago, we announced one of the most exciting partnerships with NEM Group. Like for us, like I personally started my crypto journey on NEM, so I'm very, very proud of this. And as many of you may have already been doing, like our test net stake Zen is already live, so I invite everyone to participate. But today we wanted to give you kind of a better understanding of what this like partnership entails, like how we're going to be working together, and like what kind of the vision for NEM from now on is going to be. So I'm happy to welcome Iain Wilson. Welcome, Iain.
Yeah, hi there, Albert. Great to be here.
So Iain is the CFO of NEM Group, and he is the managing director of NEM Trading, where he's responsible for the management of the group finances, as well as the day-to-day operations that involve liquidity management, exchange support, and token lending. Iain has extensive experience in investment analysis, financial risk management, trading strategies, due diligence, and like he's been in the he was actually the managing director at HSBC Investment Bank, right?
Don't give my age away here. I've got to be careful.
I'll try not to. But like, I mean, I think you have proven that you have a massive experience in the trading industry, like in the financial industry, right? So, I mean, like, well, first, like, thank you very much for joining. It's great to have you here. Like, I know that many of our viewers like are very interested on understanding, you know, what NEM Group is, and like I'm very curious to understand as well what NEM Trading is. Maybe we can start by could you introduce yourself a little bit, like where do you come from?
Sure. So yeah, I mean, my obviously, you know, it's Albert, you just said, and my background is mainstream finance, investment banking. Obviously, I did that for a long period of time. I'd say, you know, a lot of things I was involved in were things like market making, you know, government bonds, market making derivatives, building up derivative portfolios, asset liability. I've also done things like running massive asset management portfolios as well. So, you know, a lot of that was, you know, in terms of, if you look at derivatives, it's quite interesting because I guess, you know, I started doing derivatives in the 90s. So it was quite, you know, it's pretty new there. The technology-wise was fairly well compared to mainstream enterprise technology. Was very advanced trading systems. You know, you had to build up a lot of different products. But one thing I did take away from that really was I always had. I guess if you're working on that side, you just find that most things you can probably do on the fly if you have good systems. But actually, the real problems were all the technology behind the scenes. So it's things like the physical settlements, the custodying of assets, moving things around. So if you think of things, we were doing things in a digital form where actually it's very similar to tokenization. You know, and obviously now, you know, you've got huge trillions of dollars worth of ETFs, which really, you know, a digital representation of underlying assets.
Yeah, it's getting really serious, right? Like how would you compare like the technology back then to what we have now in crypto?
Well, I mean, I got to be honest. I mean, a lot of time when I've had people pitch me stuff, you know, over the last few years, a lot of times I just say it's not really new. I mean, you know, a lot of them are just supplying existing middle, you know, in a regulated environment, right? The regulated environment is very tight. So, you know, if you're designing products for a regulated environment, you know, you have to think quite carefully how do you structure things, and actually, really, you can't find yourself coming into the same sort of pain points as what someone would do in traditional finance. So really, like what we've got now in digital asset tokenization is amazing what you can do. A lot of it, I think, is how you fit it into a regulated structure, because, you know, the regulators aren't allow us to go from A to B in one go. You know, clearly the regulators know we need to digitalize because, you know, it's massive benefits for consumers, users, you know, all of us. But, you know, you've also got to do that in a way that there's, you know, things are secure and you've got protection of users' assets, and, you know, there's some recalls. Things are very security tested, you know. So so yeah, I mean, it's exciting to be in. I think some of the underlying technology in mainstream finance was really good. I think there's a massive problem in terms of centralization aspects in mainstream finance, whether you talk about custodians or whether you talk about huge banking systems, hypothecation, all of these sort of things. So, that's why I think really for us is on the cutting edge. We've got loads of ways where actually we could actually get around some of those big centralized issues and actually look at the more decentralized models. And obviously you've got the base level where, the crypto rails are, faster, cheaper, than the existing financial structure. So, yeah.
Very interesting. So, can you please tell us about NEM Group, NEM Trading,
Yeah, sure. Yeah, just to sort of to say, I mean, obviously although it's called NEM Trading, really, I mean,
what do you guys do?
Yeah, I mean, the way to look at it actually really it is effectively a corporate treasury. So, okay. So it's quite mainstream, really. I mean, most companies have to have a corporate treasury. Just bottom line is, unfortunately, now we can't pay all our bills in tokens, right? And we can't even pay all our bills in stable coin. So we have to deal with, we've got basic supplier contracts that provide SaaS software. So you have to have liquidity payments. You've got to pay people in euros. You've got to pay people in dollars. So you get on with that. So there's a base level where really we're operating. Obviously we're a technology open source platform. We're building technology as well on top of it. But you just have to manage. You just manage your finances. It's just like a household budget. Really, you need some sort of operating structure to do that. So it's really quite simple. Really, it's just a sort of very vanilla sort of treasury structure. The bit that overlaying that gets really interesting is you're dealing with effectively your own token. So you've just got that into play, and obviously that's the way the whole tokenomics around NEM. It's you've got to think of yourself actually as part of a bigger ecosystem. It's really quite different from a normal corporate treasury.
Absolutely. I mean, it must be very, very challenging to know that every single thing you're doing completely changes your treasury, right? Is there any learnings that you any key insights on what it takes to do that?
Well, yeah. I mean, yeah. I guess. I mean, what I'd say the one of the big things for me as well is because I've used to work in a regulated background. Mm-hmm. There's so many checks and balances in there that you have a lot of different systems and you have a lot of physical checks, right? So working in these industries now, it's very early stage. You've got a real struggle where you've actually got to go, okay, you want to move really fast. We're trying to launch our new blockchain symbol this year. There's so much work involved in doing that. So you've got to hit deadlines all the time. You've got to be fast. But against that, you've still got to think about what are the core things that you need to worry about, right? Like credit risk, custody of your assets, security of the transfers, KYC, AML. That's even for us as a software company, it's really important. High performance, because if you're selling product to enterprise, first thing they do is they do due diligence on you as a company and also your background, right, to get banking lines. Mm-hmm. And we were lucky; we've got great banking partners. Because we're a software company and a sort of very well established NEM in terms of the industry, we've got a really good banking partner. But again, we've only got that banking partner because we maintain really strong standards. So you just have to do that. And you've got to take these regulatory issues really seriously, because if they put a freeze on our accounts or they have an investigation, the whole project will be destabilized. So that's the takeaway, really. I think if you're operating these markets, you've just got to think, you want to move fast, but think really carefully about what you're doing.
So, you mentioned the kind of decentralization aspect, right? And I mean, StakeHound is trying to bridge the gap between staking and DeFi. So maybe we can start kind of with the DeFi side of things, right? How do you see kind of using the DeFi space? What do you think about it? How are you looking at it right now?
Yeah, so I mean, the way I look at DeFi is the fundamentals of that DeFi for me is basically it's the decentralization of the custody. Uh-huh. Right, so it allows the user effectively, you could say, is a couple of things. The user's closer to his own assets. Now, the DeFi gets interesting where effectively it's programmatic structure.
Yeah.
So you could argue, you know, you're putting your assets into effectively a programmatic piece of software or contract. So, you know, okay, fine. So in a sense, you are giving up your assets to a software. But obviously it's very different from existing structure where, you know, you're parking assets with banks or custodians. But you know what you're getting. The way I look at it, I use some of these products. I use the products so I can test them, get in touch with what's doing. And I think some of the product innovation in DeFi is really impressive. There's a few areas like the concept of decentralized market making pools. So you know the old models where you were a retail user, you had to go through brokers, you had to put your assets to a broker who then executed the trade, you know, all of this sort of stuff. You know, you've got situations here where you can just put your assets into a pool. The pool's controlled by algorithms to do the market making. It maintains a liquidity pool. You know, there's a whole load of tokenomics around those liquidity pools. They're just very powerful concepts. I mean, at the core, really, they're increasing liquidity for the whole token economy. They're also cutting out middleman, and they're also democratizing the process because they're giving people other options. So, you know, I'm not saying, you know, you put all of your savings in something like that, but what I'm saying about it is, if you look at retail product in itself, you know, it's a tough environment in the mainstream financial system. I think the thing is here, you've got gives you other options, and it's like, that's it, increased utility, basically, bigger opportunities, say increased utility.
Absolutely. I mean, if you look at the yield, like for example, when you have StakeHound and you can go and you can provide liquidity on Uniswap, then you're going to be getting kind of the yield from kind of the staking side of things, as well as like all these trading fees that are happening, right? Like that's something that until now, like I don't think that was possible in any way. Anyway, right? Like it's just like how can anyone in the world create their own market and know that there will be a lot of volume if the asset that they're trading is, you know, good, right? I think that's.
Yeah. I mean, you know, that's getting back to this utility. Like, I look at things in terms of utility, right? So for us at NEM, you know, we want to have a really secure network. Mm-hmm. We want to have people staking their tokens on our nodes. We want to have lots of nodes. You know, the more nodes we get, the more decentralized our nodes are, the more secure our network is. When we get enterprise looking at our chain, you know, they want to have confidence that we've got a secure network. So that is fundamentally the key thing about staking. But if you look at it from a user's point of view, you know, you also want utility. You want the maximum opportunities for you to make different decisions, you know, with your underlying tokens. And it's a question of choice, isn't it? I'd say, and also at the margin, really, you know, if the bar for staking is really high, you know, it's just not very democratic. If you have a really high bar, you probably get less nodes. You know, you want more nodes. So how do you incentivize more nodes? So there's this is part of it, which is why I think, you know, your solutions, you know, is powerful, because it allows more participation and it allows more staking, and we'll have more secure network, we'll have more nodes.
So, like, how do you see this playing out? Like, do you think that people are gonna be like understanding this? It's like, is there any message that you kind of, how would you convey to people that you know, like, why this is useful, why this is important? Like, for example, right now, like NEM staked amount, the amount of NEM that's being staked, of Zen that's being staked right now is about like 40% more or less, right? And I mean, I guess it makes sense. Like having a super node costs about like $350,000 right now, which is a large amount of capital, like unreachable for most of the people. So how could you, how would you explain this, I guess, a bit more?
Yeah, I mean, I guess the way I'd explain it at the moment is, you know, in terms of the structure of our existing network, NIS1, it's obviously a 5-year-old network. It's up 24/7. It's never any downtime. So there's a lot of really positives about that network. But in terms of the tokenomics, fundamentally, the real reward comes from having that minimum 3 million balance on the node. And okay, there is the concept of delegated staking, but you know, the node reward is not at a level where it's obviously enticing people who've got smaller balances to lock up their ZEM. So the way I look at it, you know, we're thinking, you know, we thought along with the tokenomics in Symbol, we spent a long time. It was a cross effort group from members of the community. to come up with and want to come up with a better tokenomics that allow more participation, right? So I would say the way I'd explain it on your solution at the moment for Zem is you can draw in effectively smaller balances to then stake on nodes and increase the nodes, and you give them an enhanced what's the word, reward. I mean, you could call it a node reward or a for participation, for the expenditure and the effort that they're making for securing that network, that they receive no reward, and that's ultimately how I'd push it back. It's a strong way of saying, look, secure the network. This is the opportunity for you to secure the network, and this is a way for you to do it in a small balance.
No, I think that's exactly the point. Yes. Yeah. So you touched a little bit on the kind of the staking, right? Like, so I have a couple of questions. So, well, first there will be NEM and Symbol, right? Can you tell us a bit about that? Like, what is Symbol? Like, why?
Well, first thing I'll say is effectively, NEM is the project, and really Symbol is a product or piece of technology that's effectively NEM. So I don't see it as NEM and Symbol. I see Symbol as, well, Symbol by NEM. So I see Symbol as our new product now.
Got it.
So getting back to that, I mean, really the reason why we've got Symbol, is really because there's been a huge amount of learnings from 2015. It's one of the first proof of stakes. Now, there's been a huge amount of learnings during that time. And I think really the ambition of the core developers was to build a platform that was going to be scalable, had a lot of groundbreaking features, and would have mass adoption, and would be a real robust enterprise type platform, public and private chain. And to get there, the reality is to get to that position, what you knew in 2015 and what you know now is different. And you realize that in terms of architectures and in terms of what we're doing there, we faced a situation where, we needed to do that on a slightly different technology platform. So that's the reason why I've got a new blockchain. But I mean, intrinsically, they're going to be linked. There's going to be a situation going forward. We're going to look at the development of our NIS1, our first chain, and Symbol, and they're still going to exist in parallel. We're going to make sure that there's going to be some enhancement and open sourcing of some of the modules in the existing NIS1. And again, there's going to be different use cases, I think, probably that will sit with the original blockchain, because if you don't need certain feature set, it might be a lower cost, different way. You might actually want to do it on this one. Symbol will be quite different because going forward, it will become more powerful over time. It's not like you release a piece of software day one and that's it. There's a roadmap that will be coming out, which everyone will better see. It'll be very transparent what that roadmap is. But if you look at it, the architecture of Symbol has effectively got plugins, and plugins are quite powerful because we can build features into the native protocol, and there's the more features within those plugins we're going to put in. So we've got some groundbreaking features that are out in Symbol, but actually it's going to be more over time, and I think that's what people will see, which will be good. So it gives you a bigger opportunity set for building products. That's what it's all about. You need to build product, and you need to use that feature set to build product.
So how will like the staking, like the tokens work, I guess? Like, what will be the difference, and like how will the staking be on Symbol?
Right. Okay. Well, look, I mean, the first thing is everyone who's is a holder of an NEM token Zem is able to opt in now. They can do that opt in. It's a 1-for-1 token allocation. So the key thing is, it's not a situation where anyone's going to lose out here. They're all going to effectively have their Symbol tokens. That's the first thing.
Yeah. I mean, just to put a note on that, what we're going to do, like from StakeHound, is like everyone that's holding stake Zem will be distributed stake Zem as well when that happens. So it's like you don't need to worry if you're already like using the stake Zem. That's going to be kind of as well.
Yeah. So the great thing is you're obviously supporting the opt-in. So that's the key thing there. You're handling the opt-in. Now, obviously, there'll be, users can opt in their own wallet, but actually you're going to take that process away. You're going to handle all the opt-in, the allocation of the tokens. The users effectively, going to have their Symbol. So that's great. So in terms of, I mean, the tokenomics are different on Symbol. So there's a change on the tokenomics. I mean, I think the biggest way of looking at it is it mimics more towards BTC in the sense of it's a smoother profile over time, but with BTC, as we all know, we get halving. We get the block reward steps over time, steps down over time. With Symbol, we're just going to have a step down of the block reward over time. One of the reasons why we did that was we actually got the inflation function within Symbol, so it was quite a neat way of showing that functionality. So yeah, we put that in. I think the advantage of block rewards is quite easily recognizable to most people. Sort of understand the concept of a block reward. So yeah, that's clear. Yeah, that's it. And I mean, the other thing to say, it is a at the margin, it becomes, staking services become a lot easier, I think, with Symbol, because you don't have that, 0 to 3 million step. I think on balance, it'd probably be easier to construct staking as a service.
Got it. Amazing. So maybe we can look into like we were talking before we started talking. Before this session about interoperability. That you think that it's important. Like, how do you see the NEM ecosystem integrated with DeFi? I guess, like, obviously, like StakeHound is trying to build one of those bridges. I would like to understand kind of how you see this playing out a little bit. Like, what is exciting, and like how you see the bigger picture.
Yeah. I mean, I think. So, I mean, lots of people have asked me, in terms of, how I see things evolving in the future. And I think one of the biggest things, one of the central things I tend to think of is, I don't think the future is there's going to be one blockchain, right? So, there's not, you can argue we could all be maximalist about things. Some people are. I think the reality is, you're going to get networks and networks interconnecting. And I think you've got to have a world where you've got to have, like them or not, you've got to have a Visa network, right? But the Visa network will connect in with other networks, and probably it's going to connect in with crypto networks. But then also a level for us is, we're going to connect into other crypto networks. And I think that's realistic, really, because that's where interoperability comes in. So what do I mean by that? In a way, there's an element of standardization, right? So standardization. So the standardization of what we do, say, for example, tokens. The standardization of how a best practice of how we should do a token in NEM, and obviously there's a specification, controlling metadata supply, etc. But actually, you've got to think about, really, there's a wider standardization, because do you really want to have a situation where you've got a token, say for example, yours a stable coin token? Well, actually, why couldn't that same token run over every network? Right, and really that comes down to the interoperability and the standardization, and I think that's quite important. I think really, because a lot of if you abstract things away in terms of users, for the user's point of view, you want to have a safe, secure asset. You've got this token, but you want to have the maximum utility out of it and be able to use that. And in some respects, you want to be slightly agnostic in terms of the underlying technology. You want technology that works, fast, scalable, cost effective. And again, I think that's where a lot of, in terms of us, all these blockchains are more at protocol level, and all the layers that we integrate with, that's really what we've got to get to. We've got to get to a situation where the users and the builders who have the ultimate customers, that all this technology is abstracted and just works really well. So that's how I see interoperability. I think the user basically gets something that's really slick, that's delivered in a mobile app or desktop. But behind it, we just got to get everything connected. Right.
I mean, after all, you have to have a tool for its purpose, right? And you really can't compare. Like, I know the feature set that Symbol is going to be bringing in as well. And I think, like, some of those things are actually not possible to do on Ethereum. Like, some of those things are not possible to do on Ethereum. And it means it's like a completely different tool. Like, some people will need to be using this tool for specific things. And then the better ways to kind of use one with the other, like if you can have, maybe smart contracts contacting Symbol potentially, I don't know. I mean, I'm looking forward to seeing the roadmap and seeing exactly what's in there. But essentially, I think that is going to be a complete game changer, a complete game changer, right? Like NEM is designed so that you have an API, you've got like servers normally like talking to it. If you could kind of decentralize the other side of the thing, of the question, that'd be very good for sure.
Yeah, I mean, to me, like the NEM approach was API driven. You know, I'm from a financial background, so like we're very used to APIs. So you know, so a lot of mainstream enterprise they get that. So mainstream enterprise who wants to engage in, you know, with blockchain, you know, we're a really good platform to do that. But having said that, you've got to also draw in some of those underlying in terms of, you know, Ethereum virtual machine, right? There's very specific use cases that are really strong there.
Yeah.
So you need to find, you know, this is the thing about the, you know, like the Lego bricks type thing, right? You need to find a way of combining all of these things together to just deliver amazing products. You know, you could argue a little bit. I mean, someone's described us as, you know, in some respects, you know, is more web driven, right? But I mean, Web 3.0, right? This is where this bigger thing of Web 3.0 is going there, right? So, and some of the specific use cases clearly on Symbol are going to be really strong, and people are going to want to do that. But you know, from our point of view, you know, we've also got to give people more utility. Right? If you're a developer,
of course,
you need more options. You know, because you've got to solve a problem. Your problem is solving a customer's problem.
Absolutely.
So we need to give options so people can solve customer problems. And you just brought up there with the smart contract. I mean, particularly that's an area where, you know, you need to effectively have that really efficient bridge. You know, which I think is going to come. You know, I mean, it's again, we're going to see all these little things come.
Looking forward to that. Absolutely. I mean, like we've got some questions from the community.
Right.
Some of them we've already like covered them, but like one of them is like, I mean, there's a couple of them that truly stand out to me. Like one is saying like, is it really the time for DeFi? Do you think that, like, I mean, you know, this bubble maybe popped. Like, where do you think that DeFi is going?
I mean, look, I mean, the thing that there was obviously a massive ramp up in expectation of DeFi, but really we had very low volumes in these DeFi products, some of these projects. So, you know, we had, you know, 200-300x suddenly increases in volumes, right? So there was this huge, you know, shouting about it, right? But if you take the step back, you know, what I said, I touched on some of these issues at the start. You know, what if people were really happy with the mainstream financial structure, right? If people were really happy with it, everyone was really happy with their bank. You know, if everyone's really happy having huge centralized points of failure. I mean, the regulators realized that, you know, the whole financial system nearly went pot when a big US bank went down. You know, if, you know, so we sort of know we've got problems with the existing structure. Okay, so how do you get a better structure? How do you actually cope with, you know, finance is one of the biggest things for every single person. The reality of paying your bills, needing to borrow money sometime, having a small amount of savings or a large amount of savings, doing something with that. It's quite fundamental, right, to living, right? Yeah. Everyone's got that problem, and you know, there's a pain point in a number of countries around this, and there's even issues in some of the more developed countries around this. And so I think DeFi is not going away. It's got a lot of problems it needs to solve, particularly how it deals with some of the regulatory aspects. But in terms of the innovation of the product, I mean, you know, that's what you need to have. I mean, it's more DeFi to me is more fintech. You know, it's financial innovation, and again, a lot of the mainstream fintech investors really, that's why they're so interested in DeFi, is because actually they look at it and think, well, this is just fintech, right? It's different models of doing stuff, right? It's disrupting existing models, giving new models, creating a lot of utility. Yeah. So yeah, it's not going away. You know. But it's definitely got to deal with the regulatory aspects. I think that's the biggest thing at the moment.
Absolutely. I mean, there's always going to be like ups and downs, and we learn and we build through these ups and downs, right? So, like, what do you think? Another question, like, what do you think about the PayPal announcement yesterday?
It was funny. We had a call this morning actually about it. I mean, the way I thought about this stuff is you know, it's back to what I said about networks, right, and loads of interconnected networks. The reality is, you know, you're never going to get a situation where you've got, you know, Visa network's huge. The PayPal is basically like a gigantic bank with like huge funding positions, right? But people don't realize in terms of really, it's systematically important company, and actually probably, it should be considered more like a bank. Now, if you're one of those companies and you're looking into our industry, you can see a few things that actually might potentially disrupt your business model. And so, but then the other way of looking at it is, look, you're an existing incumbent, and there's probably a chunk of things in digital asset space which can, well, one, lower your costs, two, produce a better product for your customer. And so you need to engage it. And this is why you have innovation hubs, right? All these companies are looking to take some of this innovation in these technology industries. So overall, I think it's positive. I think the more, the more the bigger existing incumbents start engaging, with the technology, the more there'll be more money in the space, but also actually the reality is there'll be more developers, there'll be more people building product, there'll be more opportunities for earlier stage companies as well. It's a bigger market, so. I think you have to be realistic about some of the existing financial structure, and anyone in this space, we need to take it as a positive. That people are sort of going, okay, right, we're going to engage with it.
Cool. So, do you have any kind of last thoughts for our audience? Like, is there something that you would like to highlight?
Yeah. I think it's. I mean, there's so much going on, and sometimes sometimes it's very hard to keep on top of things. What I would say is, the way I tend to approach things myself is I tend to experiment a lot, and by that I mean just be careful, and if you're gonna some of these new products it's fairly complicated if you've never really used them, like Uniswap's classic example. I mean, I've used a Uniswap, but only because I experimented with some of these things. But I can't say I understand every aspect of it, and I've read the underlying smart contract code. I haven't. So what I would say is, just be careful and just engage with it at a level where it's not going to give you sleepless nights. I think this is how I would be my best advice.
That's for sure. A good advice, absolutely, especially in this industry, 100%. I mean, it just reminds me as well. Like just yesterday, we recorded with Nicolas about a step-by-step process. Like try to kind of explain like how set up your wallet on the MetaMask, how to trade stake them on Uniswap, how the rebase works, how to supply liquidity. Like I would absolutely invite anyone to watch that video and see. Not just watch it. I would suggest please just go ahead and try it out. Like anyone that comes to our Telegram channel can just get some test stake exam, and you can use it. And I'm sure that there's going to be different initiatives to promote that and to make sure that this is as well understood as possible. I think we need to be, education is key in this industry, right? Like you said, there's so much stuff going on. Like anything that helps you get educated and not lose money with it, that's you should try to grab onto those little gems. So
no, definitely. I mean, I think the video. I mean, we can track our engagement, and we find the engagement is strongest on the video. So our guys are loads of things, like they're setting up a testnet node, all of these sort of things. And I gotta be honest, I watch bite-sized videos. I do that because I just want to learn how to do it, and great resources out there. So yeah, I totally agree. I mean, just watch the video, and again, and I pause, stop, stage by stage, and I do that all the time. So it's good.
Awesome, cool. So I think that we've come to an end to the sixth StakeHound Ask Me Anything session. Thank you very much, Iain, to be here with us. It's a pleasure talking to you. And
thank you, Albert.
Yeah. So please, to everyone that's listening in, please remember to like and subscribe this channel. Join our future conversations, and remember that. Iain, do you think that you can jump on the Telegram group for a bit to ask a few questions that the community may have?
Yeah, of course, yeah.
That'd be awesome. Cool. So, I'll see you all next week. Have a good one. Bye.
Thank you.
See ya.